Hi everyone, welcome back to our channel Vedangas. This is Amit, accompanied with my co-partner Sumit. So guys, before going to the video, please subscribe to our channel and hit the bell icon for the latest notifications. So let's start the video. Hi everyone. So in this video, we are going to solve this problem by using the valuation of shares of net asset method. Okay. So in this video, we are going to discuss how the net asset methods work, what are their formulas, and what are the use of using the net asset method. Okay, so let's see that. So in this video we are going to discuss about the net asset method. So first we need to understand how this method works and what are the formula of these methods, right? And also we need to know how to calculate the net asset. That is very important to know. Okay, and we will see how to calculate the net asset. Fine. So now let's take the example of a net asset method of a valuation of shares. So see here. So this net asset method is also known as intrinsic value method. Okay, this method is most popular by the name of intrinsic value method. Okay, so in the examination also they can ask mostly about the intrinsic value method. So don't confuse about that, the net asset value method or intrinsic value method. And also this method is also called as breakup value method, balance sheet method, the valuation of equity basis, or the asset backing method. So don't confuse, mostly in the examination they will give intrinsic value method. Okay, so we are going to discuss about the net asset method of intrinsic value method in valuation of shares chapter. Okay, so suppose you have a company and you have to evaluate the shares of your company under net asset method, right? So first you have to understand how the valuation of shares is to be done and the assumptions of net asset method, right? So in this method, that your company is going to be liquidate. Your company is under the position of liquidation. Okay, your company is going to be closed down. Okay, so if your company liquidates in present time, in today itself, then what would be the value of your shares that you have to find, right? What you have to find, what will be the value of the shares which the equity shareholders would get, right? So that you have to find. What we are doing here, we are calculating the value of shares of equity shareholders, right? So here your company is going under liquidation. So here liquidation, what we sell all the assets, right? We sell all the assets like goodwill, land and building, investment, cash, etc., plants and machinery, etc. All the assets we sell that, and after selling the asset, whatever money is realized from selling of the assets, then after that we have to pay off all the liabilities. From that money we have to pay all the liabilities. All the liabilities we have to pay off, whether it is a creditors, debentures, loans, or tax payable, bills payable, outstanding expenses, many more. So all that liabilities we have to pay off after the realization amount, after selling the assets, right? So that is the liquidation. So we are talking about liabilities, we are not talking about equity, the surplus or reserves, etc. We are not talking about that, we are talking about liabilities. Creditors, debentures, bills payable, bills receivable, outstanding expenses, those all liabilities we have to pay off after getting the sales realized amount. Okay, so even in this chapter we are not selling all the assets. Here it is not liquidation chapter, here we are not selling all the assets in the business, right? Here just we are assuming that our business is under liquidation, that we are giving this example that all the assets is selling and getting realized amount and we have to pay all the liabilities. So here what we have to do, we have to calculate net assets, right? So we are going to find out the realizable value of the assets. Suppose if we sell the assets in the market, then how much value we will get. That is what we have to find here. And we have to take all the assets, okay, land and building, plants and machinery, stocks, etc. All we have to take here, and we have to assume that if we sell the all assets, how many realizable amount is going to be earned by our business, right? So that we are going to find here the net asset, right? So you have to take all the assets except the fictitious assets. Fictitious asset means like preliminary expenses. Preliminary expenses means like the debit column in the profit and loss account, discount in issue of shares. These all are the losses, and these are the accumulated expenses. What? They are accumulated expenses which having capitalization in the balance sheet. So the fictitious asset will not be taken in the asset side, because the fictitious assets will not realize any value in the market. So there is no value of the fictitious assets. Thus, we are not going to consider here fictitious assets, but we are going to take all the assets. We are going to take all the assets except fictitious assets. This is not like goodwill chapter. In goodwill chapter, we didn't take goodwill in the balance sheet, right? And we didn't take non-trading investments. We only took trading investment. But here we are taking everything, because here we are not doing valuation of goodwill. Here we are valuing the shares of a company. So whatever assets of a company have, you have to take that all. You have to take the realizable value of that assets. So actually we are not going to sell the assets. Just we are assuming that we are going to realize how many amount we are going to get if we sell those assets now, right? And from the realizable value of the assets which the company gets, we are going to deduct all the liabilities, all the outsider liabilities. We are going to deduct the realizable value of an assets with all the outsider liabilities. All the third party liabilities we are going to deduct with the realizable value of assets, right? So after deducting the value of outsider liabilities from the realized value of an assets, so whatever left right, that is called as net assets of a company, right? After deducting the realized value of an assets with the outsider liabilities, whatever the value will be remained, that is known as net assets of the company, right? But this is not useful. Why? Why? Because here we are calculating the values of equity shares, right? Here we are calculating the values of equity shares. So we need net asset available only for equity shareholders. We need a genuine net asset for equity shareholders. So in your company, if there is a preference shareholders, so whatever claim they have, right, we have to deduct that claim from the net assets. Whatever claim the preference shareholders have, you have to deduct it with the net assets. And then you will get the pure net assets of equity shareholders, right? Clear? So this is the concept of net asset method. Here we are going to find out the realizable value of an asset, and we are going to pay off all the liabilities. We are going to deduct the outsider liabilities from the realizable value of an asset, and then we will get the net assets of a company. And if there is any preference shareholders, we are also going to deduct that preference shareholders claim from the net assets. We will get the pure net assets value of equity shareholders, right? So this is the concept of net asset method under valuation of shares chapter. Okay. So now we will put all this into a formula, and we will see how to calculate the net asset method, net assets of equity shareholders. Okay. With the proper formula. So let's do that. Let's see the formula. So now here is the formula of net asset method. So here, to find the value of equity shares, first we take net assets available to the equity shareholders. First we take net assets which is available to the equity shareholders. So we saw, right, how to calculate this? Yes. So we take net assets available to the equity share only and divide it by the number of equity shares. And then automatically you will get the value of equity shares, right? So this is how you calculate the value of equity shares under net assets method. Fine. So now the main thing in this method is calculation of net assets, right? So we have seen how to find the net assets of equity share, but let's see the proper format to find the equity shares. How to calculate the net assets of equity shares. Okay. So to calculate the net assets of equity shares, few points are to be remembered. That is, so let's see how to calculate the net assets. So before calculating the net assets, if it is given to find the goodwill will be always ascertained in finding the net assets of equity shares, right? So goodwill will be always ascertained. So check out the question, and next after goodwill we have to take all assets at realizable value. All assets we have to take except the fictitious assets like preliminary expenses, profit or loss in the debits balance sheet, and discounts of issuing of shares. We have to exclude that all, right? And also what we have to take, we have to take the non-trade investment in total assets. We have to take that, and after taking that all assets, we have to deduct it with all liabilities, all outsider liabilities or third parties liabilities. So after doing that, we will get net assets value, right? Even after getting net assets, we have to find the pure value of a net assets of equity shares. So to do that, if any claims of preference shareholder is given in the question, then you have to deduct it, the preference shareholders claim with the net assets, or also the proposed dividend, and also we have to add the notional calls. Why we have to add the notional calls? Let's see. So in a company, what will happen is, in a company, it takes lots of classes of difference of shares, right? So let's see here, there are two different classes of shares. So let's see 10,000 equity shares of rupees 10, and second one is 20,000 equity shares of rupees 10 each, right? So here one difference is that in the first class, here the equity shares of rupees 10 is fully paid up. That means the equity shareholders has paid entire amount for this class, right? But here in 20,000 equity shares, only rupees 8 is paid. So this is the partly paid up shares. So here we need to calculate the value of shares under net asset method. So for this calculation, we need to make it fully paid up, right? We have to make equal to the first clause, right? We have to make it fully paid. Okay. So how can we do that? We can make this clause equal. By just calculating up the unpaid value, right? Unpaid value. By calling up the unpaid amount virtually in the book, right? So here unpaid amount is 2 rupees, right? So 2 rupees into 20,000 is 40,000. So 40,000 will be added. Okay. 40,000 will be added as a notional calls. So that is what we have to do. We can easily calculate the net assets of equity shares here. So let's see. So now let's solve the problem. Okay. So here a problem of valuation of shares is given here. What they have given? From the above following balance sheet of X company, find out the value of each shares. We have to find the value of each shares from the X company. The X company balance sheet is given here horizontally, right? So what they have given? They have given the equity and liabilities and also the assets value. So let's discuss this. In first, the shareholder funds is given, that is share capital 20,000, equity shares of 10 each. So 20,000 into 10 is 2 lakhs rupees, that is share capital of the company of X, right? So next is the reserves and surplus. That is 2,70,000, and second one is the non-current liabilities, that is loan 80,000, and third one the current liabilities is 20,000. Total is 5,70,000. that is liabilities. Okay, equities and liabilities. And next, the second one is assets. The assets, in asset side they gave that non-current assets. Non-current asset, the intangible asset, that is goodwill, 1,90,000. We have to ascertain this in the problem while solving the problem. Okay, so next one is investment, that is 3 lakhs rupees, and current assets 50,000, and loans and advances are 30,000. So this is also 5,70,000. Okay, so both the liability sides and asset sides are 5,70,000. So these are the problem, the balance sheet of X company which is given in the question. So next, what they have given in the adjustments, they have given that for the purpose of valuation of shares of goodwill shall be taken of 2 years of purchase. What they have said, we have to evaluate for the purpose of valuation of share, we have to ascertain the goodwill for the years of 2 years of purchase. In average profit method, we have to calculate the goodwill of 2 years purchase of average profit method for the last 5 years. Last 5 years profit. Last 5 years profit is given here: 60,000, 70,000, 40,000, and 50,000 and 50,000. Right. So these profits we have to take and find the average profit, and then we have to find goodwill to solve this problem. Okay, so let's do that first. So here first we have to calculate the goodwill under average profit method as per our question, right? So to find the average profit method, what is the formula? Average profit is equal to total past profit, past year profits divided by number of years. So as per our question, the profit is given here, past 5 years profit is given, that is 60,000, 70,000, 40,000, 50,000 and 50,000. So we have to take this all, here. We have to take this all to find the average profit. So 60,000, we have 70,000, 40,000, 50,000 and 50,000. We have to add up this all and we have to divide it by years, number of years, that is 5 years. So after adding, we will get 2,70,000. We will divide it with 5 and we will get 54,000 as a average profit. So after finding average profit, we have to find goodwill under average profit. Okay, so to find the goodwill of average profit formula is average profit into number of years of purchase. So as per our question, the number of years of purchase is 2 years, right? So average profit we have got 54,000. So 54,000 into 2 years is 1,08,000 is our goodwill. So we have to take that to find the value of equity shares. Okay, to find the net assets. So let's see here. To find the equity shares, valuation of equity shares under net asset calculation. Okay, so values of equity shares, the formula is values of equity shares is equal to net assets available to equity shares is divided by the number of equity shares. So first what we have to do, we have to find the net assets for equity shares. Okay, so to find the net assets, what we have to take? We have to take all assets at the market value. Okay, so here to find the value of equity shares, first what we have to take? We have to take all assets at a realizable value of a market. Okay, so first first as per our question, the asset value that is given, non-current asset, that is goodwill, 1,90,000, but we got 1,08,000 as a goodwill. So we have to take goodwill as a 1,08,000, and investment, that is 3 lakhs rupees. So we have to take that 3 lakhs rupees, and current assets is 50,000, and loan and advance is 30,000. So 50 plus 80, 50,000 and 30,000, that is 4,88,000. This is our asset value. Okay, so this asset value we have to deduct it with the outsider liabilities. So outsider liabilities, what we have to deduct? We have to deduct here share fund with a given. We have to leave this all. We have to ignore this all. We have to take only the unsecured, the current liabilities and non-current liabilities. So non-current liabilities is 80,000 and current liabilities is 20,000. So the total is 1 lakh. So outsider liabilities minus 4,80,000 minus 1 lakh is 3,88,000 is net assets available for the equity shareholders, right? So this is the net assets of equity shareholders. So now what we have to do? We have to find the value of each shares. We have to find the value of each share, how much value the equity shareholders has on each shares. Okay, so let's see here the intrinsic value of each shares, that is the net assets of equity shareholder. What we have got? 3,88,000, right? The net assets what we have got after deducting outsider liabilities, we have got 3,88,000 as a net assets of equity shareholders, right? And the value of equity shares as per our question, that is 20,000. How 20,000? Let's see here. See here, the shareholders fund, that is share capital 20,000, each 10 rupees. So we have to take this amount 20,000 as a equity shares. The number of equity shares is 20,000. So we have to take that 20,000 here, and so the net assets of equity shareholder is 3,88,000. We have to take this and we have to divide it with 20,000. We have to divide it with 20,000. So after dividing, we will get 19.4 as a net assets of each shares. Okay. So after calculating, we will get the intrinsic value of each share is 19.4. Right. So hence the value of equity share is 19.4 approximate. Understood, right? So this is what the net asset method of valuation of shares chapter. Clear? So thank you for watching the video, and also you can visit our video description for the problem PDF, and also stay tuned for the next upcoming video of yield method and face value method of this valuation of shares chapter. So thank you for watching this video. Have a nice time.